and welcome to the Business Standard Morning Show. This is Debarghya Sanyal and here are the top stories for the day. This 2000 rupee note has had quite a journey. It came into being 7 years ago with Narendra Modi's out of the blue demonetization move in 2016. And now this pink note is set to sail off into the sunset. On that note, we have a special show for you today. We talk about the myriad possible impacts of the RBI's move to strip the 2000 rupee currency of its status as a legal tender. We start by explaining how you should exchange these notes. In this report, Tushar Verma takes you through the best possible ways as well as the challenges you might face in the process.
The last week's RBI move has rekindled the memories of 2016 note ban, when people had to brave long queues and harsh weather to exchange Rs 500 and Rs 1000 notes. But this time, the central bank has ensured that the phasing out of 2000 rupee notes is pain-free.
The banks have been advised. We have issued further circulars yesterday to the banks to make necessary arrangements, including arrangements to ensure that the people do not stand under the hot sun in this peak summer, to make arrangements for drinking water. But I do not expect the kind of a rush in the bank branches.
You have 4 months from now to exchange them. To quell panic and anxiety, the RBI has clarified that withdrawal of the pink notes does not mean that they have been demonetized. Essentially, it means that people can continue to use them for purchasing goods and services. In a notice, the State Bank of India has also said that exchanges up to 20,000 rupees can be done without the need of any ID proof or filling of forms. Amidst these, what are the best methods you can adopt to exchange or deposit the pink notes?
I think there is no restriction per se in order to deposit whatever amount of money you want to deposit in your bank. The restriction is only for the exchange of note. If you have 10 lakh rupees and you want to deposit in your bank account, you can do it without any problem. So individual can exchange up to 10 notes of 2000 rupees note, and they need to for that they need to fill in the form and submit their identity proof. That clarification from SBI have come just in today, but still I think that has not widely been implemented right now by the banks. So many of the private banks and other banks are still want people to fill in that form and take their identity proof, for a simple reason that even the banks would need to have that record that to whom they have given these notes and how they have exchanged. So I mean, if that is not done, that the whole purpose of government again withdrawing 2000 rupees notes is defeated. So it would be like a simple plain vanilla, like exchange whatever you want. There would be no question asked.
RBI is encouraging, quote unquote, encouraging you and me and people to get rid of this note, exchange these notes with other notes, give it to the bank in the form of deposit. Look at the UK example. UK has been doing this, withdrawal of certain currency. They continue to be legal tender and they remain legal tender for next 5, 10, 15 years. As and when you want to get rid of it, you do that. There is no deadline there. Will India do that? That's the key question now. But the language of the RBI, you see, the flexibility is there.
The RBI pointed that there's enough lower denomination currency notes available to meet all the demands. It also said that the value of 2000 rupee notes in circulation has declined from 37.3% in 2018 to a mere 10.8% in 2023. Further, the RBI cited its clean note policy while deciding to withdraw the pink notes. While exchanges up to 20,000 rupees can be done without requisition slips, PAN of the depositor will be required for deposits above 50,000 rupees in a day. This is according to the rule passed by the Central Board of Direct Taxes in May last year. But will you face any difficulties exchanging and depositing 2000 rupee notes?
For citizen, I think it would be, they would have a difficulty that again there would be uncertainty for them for exchange of their notes, difficulty for them to have a lower denomination notes, just to have, I mean, there is even, I have heard that even banks are now with the limited availability of 500 notes in order to exchange, so they are handing out 200, so it would be like quite a lot of notes for people to handle and manage. And due to outrush, there is a long queues and waiting time. And like we discussed, the awareness and information right now is very scarce, and and neither the bankers nor anyone have that clarity. So it is very difficult for people to actually take decision on this.
Although RBI has not said anything about revoking legal tender of the pink notes so far, a Business Standard report, citing sources close to the development, said that the notes may be demonetized by the end of December 2023. The window to exchange and deposit of 2000 rupee currency notes is till 30th September, but a special window may extend beyond 30th September for the Indian missions abroad and Indian citizens based abroad who have 2000 denomination notes.
But what about the move's impact on our economy? Will it affect borrowing rates for the government and the companies? What do experts have to say? Bhashwar Kumar brings you the larger picture.
Let me sort of re-emphasize that it's a part of the currency management operations of the Reserve Bank. A somewhat similar exercise was undertaken in 2013-14, whereby, the notes which were printed prior to 2005, they were withdrawn from public circulation, and the public was advised that you can come and exchange the notes. So this time, we are therefore withdrawing it from circulation, these 2000 rupee notes, but they continue as legal tender.
There was a strong sense of deja vu in the Reserve Bank of India's May 19th announcement to pull out 2000 rupee notes from circulation. But we will not see the 2016 mayhem repeat itself. The central bank has announced September 30th as the deadline for people to deposit and exchange these notes. However, RBI Governor Shaktikanta Das has underlined that there is no reason to rush to the banks. He said that the deadline has been fixed because unless a particular time is stipulated, the process won't reach finality as people won't take it seriously. The governor also said that the central bank will be sensitive to the requirements of people outside India who may need more time to comply. Governor Das also said that the withdrawal of 2000 rupee denomination notes was part of the central bank's currency management operations. Das also said that the RBI expected most of the banknotes to return to the banking system by the deadline of September 30th, adding that the supply of lower denomination notes was adequate for exchange purposes even after factoring in the withdrawal of the 2000 rupee notes. In an attempt to forestall any rush at the banks, Das also underlined that the 2000 rupee notes would continue to be legal tender and that people had a 4-month window to deposit them. Ultimately, the RBI governor assured that the withdrawal would have a marginal impact on the economy.
See, the overall impact on the economy will be very much limited because, in my view, I think most of the notes would either be exchanged for lower denomination currency, and to a certain extent would go back into bank deposits. Now, given the fact that most of the currency was being held for specific purposes and was not used for transactions, to my mind, this will not have any impact or any discernible impact on consumption as such. And therefore, at the margin, there could, of course, be some increase in purchase of, say, consumer goods, maybe a little bit of automobiles. But on the whole, I think it will be very much limited.
Clearly, both in intent and impact, the withdrawal of 2000 rupee notes is different from the demonetization of 2016, when 500 and 1000 rupee notes had ceased to be legal tender. In 2016, notes of these two denominations made up over 86% of the money in circulation, while this time, the 2000 rupee notes make up just 10.8% of the currency in circulation. On a more specific note, there is an expectation that the bulk borrowing rates for the government and companies may see a reduction in the short term because the withdrawal of 2000 rupee notes could increase liquidity in the banking system. So, what does the expert Business Standard spoke to have to say about this?
While it is difficult to estimate as to how much of these 2000 rupee note will flow back into the banking system and how much of these could be retained by the banks as deposits. However, in a best case scenario, even if let's say 40 to 50% of these notes are retained by the banks as deposits, it could result in a deposit accretion of 1.5 to 1.8 lakh crores for the banks over next few months. With this, the liquidity of the banking system could temporarily improve, thereby reducing the need for mobilizing the deposits by offering higher deposit rates. With improved liquidity in the banking system, the interest rates on the short-term money market instruments like call money, treasury bills, commercial paper, or the certificate of deposits issued by the banks could see a marginal decline. However, this moderation in interest rates is expected to be temporary, as the impact of high credit growth vis-a-vis the deposit growth would continue to result in an upward pressure on the deposit rates subsequently.
All of this is well and good, but you may be wondering what will happen to your 2000 rupee notes after you exchange or deposit them?
Now, will the notes be recycled? Certainly not. These notes will not be recycled because they are being phased out. So what will RBI do? RBI will dissolve these notes. There's a particular system called Currency Verification Processing System, CVPS, under which it will be resolved. And then typically the bricks are made out of these notes. And at the last stage, the bricks actually turn into different objects. Now, what are those? Like last time after demonetization, Reserve Bank of India got in touch with the National Institute of Design in Ahmedabad, and their students came out with different kind of ideas. And those ideas like creating pillows, to table lamps, to paperweights, to multiple things.
Overall, the impact on the economy is likely to be limited. Meanwhile, based on an unnamed source, Business Standard has reported that the centre could withdraw the legal tender status of the 2000 rupee notes by the end of December 2023. It remains to be seen whether this will give Indian citizens abroad enough time to dispose of their holdings of these notes.
The RBI move was also expected to boost liquidity in the banking system. The sentiment, however, didn't reflect on the bourses as most banking shares remained weak on Monday. So why didn't investors cheer the move? And what's the road ahead for bank stocks? Nikita Vashisht takes a deep dive.
Banking shares were listless in trade on Monday, May 22nd, as investors assessed the impact of withdrawal of 2000 rupee notes. While initial estimates had suggested that the banking sector may see a liquidity boost of nearly 4 trillion rupees, analysts now feel the actual deposit accretion may be far lower.
There is accretion of cash deposit that can happen with banks. And as a result of that, there will be some easing of pressure on the cost front, but this is going to be a marginal improvement because this, we are saying that, even if it is, it would be roughly about 2 or 3% of the total CASA. So there might be improvement, but I think it is going to be momentary. I think from a sentimental standpoint, it looks positive, but whether it will sustain or not, it is questionable because it is quite likely that money will flow into fixed deposit as well.
The increase in banks' deposit base could prove to be temporary as precautionary demand would eventually settle for lower denominations. Vivek Kumar, economist, Quant Eco Research, said. That apart, analysts at MK Global expect some of the new deposits could be withdrawn in cash soon after. These possibilities make the move deposit neutral for banks. At the fundamental level, the cumulative net profit increased 57% year-on-year to 1.04 trillion rupees for public sector banks and 23% to 1.17 trillion rupees for private sector banks in FY23. So what should your stock strategy be?
The performance of the global banks are very, very weak. And when that is happening, whether we can expect a upgrade in the Indian banks, not only Indian banks, the Indian sector is, the chance is very unlikely. And secondly, I think we are going to see some slowdown in the quarter-to-quarter growth in the earnings for the next 1 to 3 quarters. That is mostly because of the increase in the cost, and maybe by end of this year, the growth in the credit is expected to come down. Today, which is around 15%, it is expected to come down to around 10 to 12% by December. And valuations being just marginally above the long-term average doesn't look very, very attractive.
Though analysts feel the RBI's move could provide a liquidity boost worth 0.9 trillion rupees over the long term, they expect bank stocks to remain sideways in the near term as most positives are priced in. Today on May 23, Q4 earnings and global cues will sway the markets.
And now to the central question. Why did RBI decide to do away with the 2000 rupee note? In RBI Governor Shaktikanta Das's words, the step was taken under the central bank's clean note policy. But what is this policy? We decode it for you.
Launched in 1999, the RBI's Clean Note policy aims to provide the citizens with clean, high-quality currency notes and coins while removing the worn-out currency from circulation. The public was asked to not write on the banknotes. The banks, on the other hand, were instructed to offer unrestricted exchange of soiled and damaged notes with the fresh ones. According to the Reserve Bank's instructions, even non-customers had to be provided with good quality coins and notes in exchange for soiled and mutilated ones at the currency chest branches of the banks. To help banks achieve this, the RBI also installed high-speed currency verification and processing systems, or CVPS machines, at all its offices that deal with currency. These machines can process 50,000 to 60,000 notes per hour. The older notes are shredded and compacted. The RBI introduced 2000 rupee notes under the new Mahatma Gandhi series following the demonetization exercise announced by Prime Minister Narendra Modi on November 8, 2016. The new note, along with an updated 500 rupee note, was introduced under Section 24(1) of the RBI Act of 1934. However, the bank stopped printing these notes between 2018 and 19. Last week, RBI said that the value of 2000 rupee notes in circulation has nearly halved from 6.73 trillion rupees in 2018 to 3.62 trillion rupees as on March 31, 2023. According to data available on RBI's website, the share of these notes fell from 2.4% in 2020 to 1.6% in 2022. RBI's rationale behind the announcement is these notes were introduced to rapidly exchange cash during demonetization, and now there is ample supply of smaller denominations to meet the currency requirements of the country. Moreover, the 2000 rupee note is not commonly used for daily transactions in India. The RBI had taken a similar step between 2013 to 14 when it withdrew all notes issued prior to 2005. The decision was made to counter the insurgence of counterfeit notes in circulation. On Monday, RBI Governor Shaktikanta Das said that the central bank expects all 2000 rupee note in circulation to return to RBI by the end of September. The further decision will be taken on the basis of the number of notes returned.
I will achieve, I will fly high.
the nation's trusted bank, SBI, the banker to every Indian.
Some jewelers, meanwhile, seem to be cashing in on this big development. Reports say that they are charging a 5 to 10% premium from those coming with 2000 rupee bundles. Hope this special episode on the soon-to-be scrapped 2000 rupee notes has cleared all your doubts. Thanks for watching. For more news and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.